Hey everyone, want to give you the heads up that the Chart Guys has a new service coming out. The Chart Guys have always had goal number one of teaching people technical analysis, but we realized through feedback that takes a whole bunch of time and some people just don't have that time with their lifestyle. So we're going to be releasing a swing report that goes out on a weekly basis, and it'll be both in written and video format. And we are currently rolling that out with our members at the moment. So keep an eye out for our social media, and certainly in front of these videos I'll let you know when that swing report goes live. Essentially, the goal of the swing report is to save you time, put in a couple dozen hours every week, get this report out, and ideally help you profit. So I appreciate your support, and I will let you know when it is live for the public. A couple tickers that I traded today and some other volatile names that I was watching. So PENN established a swing position a few days ago. Reason being, a couple reasons. Number one, like the technical setup, like the hype around the sports gambling space, we have a couple headlines. We have states that are continuing to vote. We actually had a bill in California that was failed to pass. We can see the lack of bearish reaction is obviously a good sign, but just that catalyst, it's the same in the marijuana sector where every year you're getting a few states that are legalizing. So that's an always back burner catalyst for the sector. Number two, sports potentially starting to open back up. That's always a potential positive headline. Obviously have to be aware of the negative headlines associated with that as well. And number three, honestly, Dave Portnoy, I've watched him have the media eating out of his palms for 2 months. And watching him get on CNBC is definitely bullish. And he did that yesterday. And in my opinion, that had a huge impact in the stock price action that we're seeing today. So I had an average at 33. I had a stop initially under 27.52. On the day that I entered after the inability to break 34.66, I moved up my stop. I then moved my stop back down as soon as it was going to be tested yesterday in 5 and 15 minute oversold conditions. Wanted to give a little bit more wiggle room. Fortunate that I did that because obviously now sitting very comfortably in that trade. I day traded it as well today. The day trade that I took, again, I have my swing trade, no touch position at this point, and letting it ride out and hopefully hitting all-time highs over 40.14 sometime in the near-term future. But the day trade that I took was, okay, watching this insane move, clearly a short squeeze, clearly hype and bull momentum, and seeing the consolidation and saying, all right, I've seen this movie before. I know that in significant bull moves, we look for the ideal scenario to be midday consolidation for an hourly bull flag, and then end of the day, new high of the day, strong close for bullish momentum into the following day. So I looked to enter for the hourly higher low. On the 5-minute time frame, I was watching the downtrend, and the bears weren't getting significant follow through. Lower low by only 8 pennies. Lower low by a bit more follow through, 25 cents. But I scaled in the 35.60s. Reason being, number one, hourly time frame, we're looking for a higher low. That's the bigger picture. That's the outline of the trade. So I was planning on scaling in. I loved the fact that the 2-minute time frame was this waterfall. Straight drop with no little bounces in between. Started scaling in the 35.60s, and I would have scaled in into the low 35s if we had kept dropping. I was able to enter a little bit more aggressively because I was sitting on swing trade profits as a bit of a cushion. If I didn't have that, I probably would have traded with maybe half the position size that I was trading with, but I scaled in 2 or 3 orders and then scaled out a little bit and then held some into the end of the day. So what I did was scale in, average 35.65, something along those lines, scaled out in the 35.80s, 35.90s, partial position, put my stop under 35.54, and then hope to confirm the hourly trend change, which we did. And then at the end of the day, I had my stop on the remainder of my day trade position under 36.73, got stopped out there. Solid trade, still in the swing position. And again, we're just looking at high of today resistance and then all-time high resistance after psychological levels. And the most important short-term support is that 35.54 hourly higher low. CGC, so in the market video yesterday, I've been talking about how watch the MJ sector for a volatility and volume spike because we're getting very tight. 5 days, we've just been in a tightening range. So we got that today, and a bit of shenanigans, market games being played where we had ACB with a bull volume, bull spike in the first 5 minutes of trading today, and it stood out. I looked at that candle and said, okay, that's a nice bull move, but upper wick profit taking, and I'm not seeing CGC and APHA and the other sector peers do anything bullish. So that doesn't mean much to me. Then I saw a new high of the day, and then I started seeing the volume pour in. So I was watching CGC closer, and as soon as I saw that uptick in volume on the second candle of the day on the 5-minute time frame, which again is not the normal pattern. The normal pattern is the highest volume in the first 5-minute candle and then declining volume for the first 15, 30 minutes of trading. As soon as I see that, I've seen this before, entered into the bull momentum in the right around 1780 or so, and put my stop at the low of the day. I'm willing to take on that risk. I've seen this before. I know that bull volume is notable. We then got very significant follow through. I scaled out 40% of my position in the 80, right under 80.30 or so, in the 80.30s, 18.30s. So 40% profit in 18.30s, and then said, all right, let's let this play out. Let's look for some healthy consolidation. Let's look for an hourly higher low. Same play as PENN. I wanted an hourly higher low in the middle of the day. I wanted a new high of the day into the close. Size of the pullback here was a little bit concerning, and I was watching ACB because it gave us the bull move first. I said, this is too much of a pullback. 15-minute time frame is going from potential continuation to now just looking for an equilibrium at best. ACB then halted and put out bearish news. So I have absolutely no doubt in my mind that this was an intentional run-up for two reasons. Number one, either bulls to exit their long positions before the news hit the wires, and a midday halt is certainly unusual for that kind of news at that time in the morning. You do not see that often. And number two, the potential for entering bearish entries for that news. Initial bullish reaction, which was surprising because they're laying off 25% of their workforce, yada, yada, yada. And then we ended at the low of the day, very, very weak. And that low of the day close completely sucked away momentum for the entire sector. So I locked in 40% of my CGC position. And as soon as ACB halted, said, I want nothing to do with this sector anymore today. I'm exiting CGC at $18 and done with it. And could it have been bullish news? Yes. But being a more conservative trader these days, take my profit, not messing around with a halt in the middle of the morning. And obviously in hindsight, good decision. Could have sold a little bit higher, but obviously not going to nitpick there. Give me my short-term profits. See you next trade. So overall, MJ sector, very disappointing day. And for those who have been following the space for the last couple of years, it's business as usual. NKLA, highlighted this morning as a top watch for same reason. Volume stagnant, sideways trading. Watch for a break of $70 first thing. We broke $70. We got a nice 2.5% of follow through, but we gave it back very quickly, and that was a bit of a red flag. So pulled back from 72 back to 68. But by the end of the day, the bulls recovered significantly. This is now 2 days in a row, increasing hourly bull volume into the close with a strong close. 2 days in a row. The lack of resistance here, looks like TradingView is freezing on me. Lack of resistance here was another reason I was watching for a bull break, because if we see that bull break of $70, the resistance after that is $73.50 and then $77. Come on, TradingView. So knowing there's a lack of resistance, knowing it's very thinly traded, and knowing that a little bit of dollar volume goes a long way for these bulls were the reasons that I was keeping an eye on it. So we got bull break of 70, strong close. Only resistance levels in the nearby, we're going from memory now, $77 short term, and then there is a lack of resistance until the all-time high. So 77, and then psychological levels after that. Bulls want to keep the momentum from the end of the day today into tomorrow for follow-through. Jets, definitely watching the airliners for the potential to form a daily high or low. I am viewing this as our high, low, lower high. Bulls are trying for a higher low compared to 1635. That's a must-hold level. And we need to see a bull break tomorrow. We closed today strong, which was notable because the S&P 500 dumped at the end of the day and closed at the low. But the airliners closed near the high of the day. And that volume is notable to me as well. So if we can see a bull break of 1736 and 1750 tomorrow, that's going to tell me our daily high or low is set. And we're going to then shift our focus back to 1932. So it's a potential play off of this line in the sand, 1635 support. And aside from that, we're just going to be watching this for the next week or two because we're going to anticipate a tightening daily range that will eventually break sometime next week. Whether it's bullish or bearish, I don't care which direction it breaks. I will play it in either direction if I like the setup and I like the risk and reward scenario. Some of the airliners are weaker than others. AAL dropped down and broke its support And TradingView is not going to cooperate. So AAL dropped down and broke this key daily support level, but the stronger names in the sector like UAL or DAL are keeping JETS, the ETF, from breaking its 1635 support. AAL is the number 4 largest holding in the JETS ETF. GEO private prisons, been on the sidelines the last day or two, and I am looking short only. So I was looking for a bearish entry for a daily lower high compared to 1375. And we didn't even bounce significantly enough for me to like an entry. We topped out very quickly this morning, and then bears took back over control. It's a potential daily bear flag. Just highlighting here how CXW and GEO continue to be extremely bearish, monthly, weekly, daily downtrends. And that is with the S&P 500 holding very strong. What happens to names that are in monthly, daily, weekly downtrends when the S&P 500 pulls back? The answer is they generally don't hold up well at all, and the bears get significant follow through. So we're just looking at key support of 1146. If that breaks, the daily bear flag will be confirmed. Next level would be 1124, a little gap fill. And I would prefer a bit more bounce follow through because I would like to make a bearish entry using 1375 as my stop, looking for that daily lower high. Might not get it. We'll see. Keeping an eye on it. Hope you had a good trading day out there today, and we will see you in the near-term future. So Mom of the Year award goes to the Mama Bear with 4 cubs, but Parents of the Year goes to these guys. They were here last year. They raised 2 babies. This spring, they've already raised 2 babies to adulthood that flew out of their nest. And now they've got at least 4, maybe 5 new mouths to feed. Unfortunately, I don't think there's any chance that all of them are going to survive, but pretty astounding. As soon the day after the first round of babies left the nest, they were fixing the nest, putting more stuff in it, and then laying more eggs.